What is up, everybody? This is Steve from Altcoin Buzz. Today we're going to bring you the topic of Bitcoin futures, talk about what's going on with those, a brief example of what they are, and how you can get into them or avoid them altogether. So stay tuned. Go ahead and hit the subscribe button if this is your first time listening in, or if you haven't already subscribed to Altcoin Buzz. And while you're at it, ring the bell right next to it so you can get notifications on when we drop new videos just like this. We're doing Bitcoin and altcoin news every single day, and we're breaking down topics and giving you our top picks throughout each day as well. Without further ado, let's dive right in and look at how the market is currently doing. Most coins are up. We have had a good resurgence of Bitcoin, but Ethereum and Litecoin are sort of stealing the show. Litecoin especially. Looking at the growth curve, we've got Litecoin up 56% just over the last 24 hours, but Ethereum's finally shown some price action, and over the last couple days has gone up $100 a coin. Big news for both those guys. So this kind of weighs in on the news. Is this coming about because of the prospect of Bitcoin futures? Are people actually looking to other coins such as Ethereum and Litecoin, the two other main coins that are traded on Coinbase? And that's a possibility, but we have seen claims from CME Group and Cboe, the two groups out of Chicago that are going to be offering Bitcoin futures. They're claiming that they're going to bring oversight and regulation into Bitcoin. And Bitcoin specifically, because at the moment they're not opening up any futures markets for any of these other alternate currencies. With all the mainstream buzz going on out there with Bitcoin, it's certainly gathered itself a lot of attention, which is a bad thing potentially for people that are in this market. But Bitcoin is remaining hopeful and strong and is rebounding and probably going to shoot up to the other projected values that we'll see. Maybe it'll hit 20,000 by the end of the year. We're not sure, but at almost 17,000 as it sits right now, it's certainly not far off, and we have seen it make $1,000 plus moves in a single day. So let's dive in and explain what happened on the 10th of December. We had CME Group, got that backwards, Cboe. So this is the CB Options Exchange. And these are the guys that have opened up the first futures trading market for Bitcoin. One thing that I've noticed is that it's XBT and not BTC. So they're using some different exchanges to determine its aggregate value, and they're pulling together a market reference of what that is. But let's first explain what a future is, because that's been a big question. A lot of crypto investors are relatively new to investing, and they don't have the stock background to understand what futures and options and things like that are. You know, holding on to a coin is a fairly simple idea for most investors. You hold on to the coin goes up and down in value, and your own personal market cap in your portfolio becomes fluctuating in correlation to that. Futures are going to be somewhat different. With a future, you're actually predicting the value of this coin at a given future date. So right now they're offering a few different options. You can either do weekly, monthly, or quarterly, meaning that you can take out a contract today on a future to predict the price of what the coin will be either 7 days from now, 1 month from now, or a whole 3 months from now. So we all have that kind of sense that Bitcoin's probably going to go up in value, but what exactly are we going to make a call on? What's our prediction for what the coin's going to be? So let's say you go out and you open up a futures contract. Well, you're not actually purchasing Bitcoin. You're not even actually purchasing anything other than the contract itself. Think of it sort of like a lottery ticket or a sports bet. If you were in Vegas trying to bet on March Madness or something like that, you're going to predict that, hey, right now there's a future or a current value of Bitcoin. I'm going to bet that it goes up. They're going to take that bet and they're going to require you to create a margin account. And this margin account is your liquid assets, aka money that's not tied up in other investments. And right now the margin amount requirement to open a futures account is pretty strong. It's actually, from what I've seen, it's about 44% of what you're trying to stake. So if you were going to open up $1,000 bet or a futures contract, you would need to hold $440 in your margin account. And what they're going to do with that margin account is, let's say that you make a prediction that Bitcoin's going to go up in value, and then Bitcoin in actuality starts going down in value before the end of your contract. So let's just make it simple on the next 7 days. You say that Bitcoin's going to be worth 17,000, and Bitcoin's currently sitting at 16.8, and then it all of a sudden slips. It goes back down to 16.4, and you're down $400. Well, what they're going to do is they're going to dip into that margin account, and for their own security, they're going to take that $400 and they're going to hold on to it for the time being. Now, they'll give that money back to you each day if Bitcoin goes back up in value, but conversely, if it goes down in value, they're going to take more from you. So once you've got that $440 that is in your margin account in that earlier example, if Bitcoin goes down in value enough to the point where Cboe or CME Group takes all of the money in your margin account, you're going to receive what's called a margin call. And that margin call says, hey, pay more money into your margin account, or we sever the contract right now and we just keep everything we just took from you. And they're going to bet on most people going all in on Bitcoin. They've seen some of the reckless behavior, or what they see as reckless behavior, taking place in the cryptocurrency market. So they're going to bet that you don't have any further money to be able to throw into your account to meet the margin call, and then, or you're going to walk away and lose faith in the coin, and then you're just going to cut your losses at what they've already taken from you at 44%, and then they're going to walk away the winner, regardless of what the actual future date of that future value of that coin is when your contract does expire. So if they make a margin call and you can't complete the terms and they take your money and they cancel the contract, even if you had a winning contract that would have been the correct prediction at the time that the contract's set to close, that's not even taken into consideration. That contract's null and void and everything's in their favor. So they're banking on the fact that with all this volatility, they're going to be able to scoop up all these high dollar margin accounts and take it away. But before you think you're going to go ahead and you're going to just say, hey, you know what? You'd be silly to short out Bitcoin. Just make predictions. It's going to go up, 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 and you can't lose. Well, you need to understand that futures are a complex trading product. And even though you can go through a broker such as TD Ameritrade, Charles Schwab, places like that, that can make the futures contract purchases for you, it's typically not meant for somebody that has a low net wealth. And then furthermore, if you're a cryptocurrency investor and you believe in the value of Bitcoin, because futures aren't actually the purchase of Bitcoin, you'd probably be better off just making a purchase of Bitcoin itself. And that leaves another question that a lot of you guys might be having. Why aren't these investors just buying Bitcoin, right? Well, see, with futures, you have the ability to purchase massive quantities within one single contract. And that's really appealing to investors who see some of the difficulties that currently exist in the cryptocurrency marketplace, aka some of the exchanges shutting down when trading volumes get extremely high or extremely volatile, or the fact that when you try to make a purchase or you try to make a sale, you see a lot of liquidity and a lot of volatility in the prices even during the execution of a contract. So let's say you've sold some Bitcoin before, even small amounts, like let's say you're selling a quarter of a coin. You're going to go ahead on an exchange or in Coinbase, for example, and execute that sale. And you're going to do it at either last price, or you're going to do it at anything other than a limit sell. And what you're going to see is that the price is going to go up and down, and they're going to fill partial orders a lot of times. So you're going to see like, oh, your order was partially executed this amount times this rate. It was partially executed this amount times this rate until your contract is executed in full. So the price that you're entering in to sell the coin at is not necessarily the actual value that your entire coin gets sold at. And that could be a problem if you're talking about a large amount of money. So let's say you were going to dump in something crazy, like 10,000 Bitcoins in your contract. Well, if you're holding those in your wallet and you wanted to cash out 10,000 Bitcoins, you can very well expect that even during the sale of your massive amount of Bitcoin, you're going to potentially even be single-handedly driving down the market share price of each of those coins. So you're going to get less on average, you're going to get less for the coins than what you thought you were going to get when you entered the contract to sell those coins. And then if you're like, hey, I could fix that problem, I'm going to put in a limit sell. Well, what you're going to find out with the limit sell is that as there's a big sell-off when Bitcoin reaches a big time high, you put in a limit sell value at or close to the current market price, and then it's not going to fill the order. You're going to maybe fill some of it, and then once the trading value goes below your limit, you're not going to fill any more of your order. So it's not going to work for you. The money you think you're going to make, you're not going to be able to take out of the market. This is where futures come into play. And both of these futures types of contracts from CME Group and Cboe are cash settlement. So they're not actually going to give you Bitcoins at the end of the contract. That's what makes it more of a wager. So it's not like we're making a futures contract on the future purchase of gasoline or wheat or sugar or anything like that, or pork bellies like you may have seen in trading spaces. But you're actually just doing a cash settlement. So that's like a real bet. You're going to say, hey, it's going to be 17,000. And then let's say it's 17.5. Well, then you're going to end up netting the difference, something to that effect. But you can do it in large, massive amounts of quantities. There's not going to be a limit to the amount you can make in one particular contract, but it does currently say that you can only hold 5,000 futures contracts at any given point. So this is really for somebody that you would consider an institutional investor, somebody that was like a hedge fund, or somebody that was a bank that wanted to make a large purchase, or 401k, mutual funds, things like that. Or a whale, you might be a whale that wants to go in and make a large purchase. But the average person like you and presumably me would be just making small trades, fractional coins, maybe single coins or single digit coins, something that's a more reasonable volume anytime we're making trades. And we wouldn't need something like a futures contract. But now that we know how difficult it is to unload large amounts of coins in real time, now we know why the exchanges aren't participating in actually purchasing the coins, why they aren't committing to coin values and fulfilling those in actual orders and giving people real Bitcoins, and why people would be attracted to the option of being able to purchase a futures contract in the first place. So it's really going to help people who want to purchase large amounts today, sell large amounts tomorrow, at a predicted price. Again, if it's between you and me, just purchase the Bitcoin, hold on to it. You don't have to choose to sell it in a week, and that's the risk in the futures contract. Like in your 7-day contract, if you said, hey, it's going to be worth 17,000, it comes at 16.5, well, then you're going to owe $500 per coin that's in your contract. But let's say on the 8th day, it hits 17.2. Well, you lost out because you put a time frame on the futures contract. Had you been holding the coin, you could have chose not to sell it at 16.5, and you could have chose to sell it at 17.2. Then yes, maybe it might not have all filled at 17.2, could have filled it less, could have filled it more, but you would have been able to have chosen when you were going to sell that. You can't come in and extend a futures contract. Although sometimes you'll see people come in as an option and buy it out early, or sell it. They'll get a futures contract that looks really promising. Then they'll turn around and sell that to somebody else who's a speculator, and then that person will purchase it at will sell it at a reduced potential gain to somebody else who will assume the risk because they see that they're going to get a win-win contract, and they're willing to buy it typically at a reduced value. So Cboe has launched their futures platform on XBT as of the 10th. Now on the 18th of December, we've got CME Group that's going to be launching theirs, and theirs is going to be very similar. One of the things that we stand to caution here is that these people claim that they're going to bring regulation into cryptocurrency space and into Bitcoin. They're going to provide transparency, or so they claim. They're going to provide oversight. They think that they're going to, through this futures path, that they're going to provide stability into the Bitcoin market. Now that would really be assuming that the amount of money that they're looking at curbing to themselves in their contracts was not going to be injected directly into the Bitcoin market. And it's true that any money that goes into futures contracts literally can't be put into the market capital. So what we have to ask though is, would these institutional investors have even invested into Bitcoin in the first place? Is it really money that would have been poured in there given the volatility and given the trading difficulty with larger volumes? So the answer to that is probably no. It's probably not going to really do much of anything other than stir up interest with more traditional investors and institutions who would like to stand to make money on the future gains in Bitcoin. And then you have CME Group and Cboe that think that they're going to be able to strong arm people out of their margin accounts and take money away from people who wouldn't have the ability to meet the margin calls. And that's part of how they make money. So comment below what your thoughts are on this. whether or not you're looking to get into Bitcoin futures, it's just good to have a basic understanding. What do you predict Bitcoin's going to be by the end of December this year? And then what do you predict that Bitcoin's going to be next year in December 2018? Write those numbers down as a fun little game. Let's say that we're going to take out a 1-week contract. Comment in there. What do you think it's going to be 7 days from now? It'd be interesting to come back and find out who is actually closest to the price. Let's do a 7-day, let's do a 1 month, and let's do a 90-day. And then we'll come back in and revisit who is actually closest on those calls, and then give you guys some kudos. This is Steve signing off from Altcoin Buzz. Go ahead and hit the subscribe button if you haven't already. If this is your first time listening, definitely hit subscribe. Everybody needs to hit the notification, and tell your friends that you heard it on Altcoin Buzz. Get the word out there. Help your friends and family start investing in cryptocurrencies.